Seven ways to identify problems in companies' financial health. I'm just talking about stock market and particular businesses because if financial health is bad, automatically that will affect the stock price immediately, or that is a red flag, huge red flags. And there are seven critical things you can note it down. So I'm just going to share one by one. And the sources, Economic Times. From that, I'm just sharing it. Hi, hello. This is Ganesan through your stock market profit coach, and I help in multiplying your money by investing in stock market. This is my book, One Page Stock Market Plan. The link for buying in from Amazon is provided in the description section. Okay, so today please subscribe to my videos so that you will be getting lots of interesting ideas regularly when it comes to stock market, mutual funds, NFOs, IPOs, and everything. So what are the seven ways? The first point is tampering financial data. Nobody can know what is happening because that happened in Satyam almost 13-14 years before. All of a sudden CEO comes openly and says that I tampered data and nobody knows, and that's a huge red flag, and immediately the stock crashed and people had lost wealth. So nothing can be done. This is one such scenario which happens. Though we have compliance and everything, people are manipulating. So this is very critical thing which happened. So as we are diversifying, we can reduce this kind of risk. And okay, so this happened even in Japan. I think Toshiba or one company had did that, and they apologized. The CEO apologized. So that kind of things can happen, has happened in the past also. And this is a red flag. And one, as you're diversifying, maybe a small amount is there, but if you're sticking with the company, it has been merged with Tech Mahindra, the stock started climbing, and now the Tech Mahindra stock is around 1000 rupees per share. So it merged, I think, around 2013 or something, and after that the stock has been climbing a lot. And the second thing is compromising quality after creating a brand. So once you create a brand, it means that you can demand the price. And once you start demanding the price, you should make sure the quality is maintained. So Wellspun India, they did a quality mistake with while supplying the product to I think Walmart, and that had they returned the consign and they cancelled the order, and because of which they suffered. So it can happen to automobile spare parts or any company. If you're seeing any company like that, that's a huge red flag. And generally, if you look at pharma companies, if there is any they will pull back if there is any combination is increasing. Everything, the components needs to be in a particular allocation, right, percentage, right. If it goes above or less, automatically they'll be canceling out, and that happens. Okay, so be critical when it comes to checking out the quality of the stock, and if you're watching any news, that's a huge red flag to be in the stock. Negative free cash flow, that is another red flag point. Why it happens? Because if the company is aggressively investing and if the revenue is not there, it will be a huge red flag. And certain companies, they will be investing a lot, investing on the research model, but once any product is hit, automatically they will be taking the money 10 times, and for the maybe 2 3 years together, the cash flow will be affected. So you need to watch why there is a negative cash flow, and you need to understand the presentations and everything. See if there is anything really serious about the company, and if their loan is huge, that is different. But if they are reinvesting for research and development, and that is the reason for negative free cash flow, means maybe you can stay invested. So look, case to case basis, you need to understand. And I think Lupin had a negative free cash flow, but they have been investing a lot doing research and development. That is the reason they are having a negative free cash flow. And another point is net profit margin is in negative territory. Profit margin is something every year after every quarter they'll be releasing, and profit margin should be positive, at least 5%, 10% should be minimal. It means they are able to, after giving away everything, the company is in profit zone, then only they'll be possible to give the dividends, the company can grow, they can reinvest after a couple of years. All these things can happen. If they're not able to generate profit margin continuously for the last 2 3 years, it's a huge negative point. You can exit that company. Okay, and the fifth point is negative current ratio. Negative current ratio means I was seeing in Ultratech Siemens there is a current ratio point, and you can check out this data in the annual presentation of the company. Every year they'll be releasing it. You can check it out. The current ratio, what it says, if it is above 1, it is positive. And what it means is that the current asset is more than the current debt, means it should be 1. If the current asset is less than the short term debts, I mean the short term assets are less than the short term debts, which means any borrowings, if they bought in the last 1 year, and if they are not able to repay, it's a huge red flag for the company, which means the company is not performing. That is the only point. Okay, and the rising debts, if the debt is keep on increasing, the interest paid is keep on increasing, means something should be taken care, and you can exit. If it is a pharma, you can look at why it is increasing. Are they research and development? They are investing a lot. If it is any other company, see how far they are planning. If the planning is not there, if the debt is kept on increasing and there is no coverage for the company, better thing to do is exiting this stock. And finally, the huge inventory buildup will be there with no sales or lesser sales. The inventory turnover ratio should be around 10, 20 or 30 days. And if it is constant for the last few years, then it is well and good. If suddenly from 30 days, if the inventory is getting increasing to 60 days or 80, 90 days, it means company is not able to pass on the inventory to the distributors for the next level of sales. And again, it needs to be analyzed based on the economic condition, case to case basis, and understand why it is happening. So hope you got a point of all the seven important things. The first thing is tampering of financial data, which happened with Satyam. It can happen to any company in the future if the company is not honest enough, if the CEO is not honest enough. Right now, the compliance and everything has been scrutinized. So let's check out. Let's not see stock is becoming like that. Second point is compromising the quality after creating the brand value. And third point is negative free cash flow. All these are red flags. I'm just saying it out again. Fourth point is net profit margin is in negative territory continuously. And the fifth point is negative current ratio, which means the short-term assets are lesser than short-term debts. And sixth point is rising debt. If the debt is kept on increasing, which is a huge negative red flag. And last point is huge inventory buildup without sales. It means companies building assets, building inventories, but nobody's buying, no distributor is buying. So please watch all these points. These are all negative aspect which might come in the coming the next few quarters, because financial health may deteriorate for any bank going forward. If financial health is deteriorating, which means the company may not perform, and this is the stage where any small company may almost go out of the business because they don't have the financial surplus. And if they are able to overcome to become a mid cap and large cap, that is a good company to stay in. If any company is having all the good points, if everything is data is doing good, stay invested. Okay, and if there is any of this, any one red flag is there among the 7 points, means better to exit and be watchful of all those companies. And this is critical, because the next 6 months or to 1 year, many companies will become red flag, which was not doing excellent for a very long time, but because of COVID, because of the COVID induced economic slowdown, it will have an impact. So thank you so much for watching. Please subscribe to this to my channel, so that you'll be getting lots of videos on stock market, mutual funds, and insurance. And please share this video with your friends who is into stock market, and that will be helpful too. Thank you so much.